One of the most important aspects of trading, folks, is a trading plan. So there are so many different trading plans out there to suit all the different types of tradings, instruments, market conditions, and so forth. So what I want to give you today is three things, okay? Three aspects where you should start if you're going to look at creating a trading plan. So number one is your entry. What criteria needs to be met for you to enter into a trade? Now, I know that sounds pretty simple, but the reality is if you're, for example, trading a news event or you're trading a technical trend, what is the reason why? You're going to look at yourself in the mirror and say, that met my criteria. This is a trade setup. You literally have to do it, all right? You need to be able to look yourself in the mirror and say, this was a trade setup. This matched my entry criteria, okay? Number two, all right, and by the way, if you're completely uncertain and want to get an idea of what types of criteria that you might look for in your trading plan, all right, have a look in the description below. In the description below, our own senior market strategist, Duncan Cooper, has a number of webinars that he shows different types of triggers, okay, to enter into a trade. For example, his 100 pip entry criteria, which involves your entry and your risk. He's got his what we call a pivot points on a 15-minute chart, intraday strategy, and so forth. So have a look at those strategies and you can make up your criteria. You can suit it to the type of trading that suits you. All right, so number two. All right, number two is once we're in a trade, what are we going to do? How are we going to manage this particular trade? Let me give you an example. Have I decided where my stop loss might be? Or where is my profit target? At what point might I choose to get risk out of the trade? So in effect, most likely I won't be able to lose on that particular trade. These are the types of things. The other thing I look at in number two is your expectation. Think about it. What might the market do? What might I expect? For example, if the trade is short and it's going in your direction, you've got to keep in mind that price will probably have a little bounce. It could have a 62 fib retracement of the current move. It could have a retest of the current level. So this is where we're trying to work out how am I going to manage my trade and what are the expectations of what might happen once I'm in a trade. And the final one, folks, is my exit, all right? What is going to happen for me to choose to exit a trade, whether that be with a profit or whether that be with a loss. So these are the first three things I'd suggest you have a look at. What is my trigger to entry? Okay, am I literally going to use higher time frames to line up the area that I want to be a buyer and a seller on a particular instrument? And then what needs to happen to pull the trigger to enter? That's number one. Number two, now I'm in a trade, how do I manage it? What is my plan? And number three, of course, is your exit. What are going to be my exit criteria? Okay, those three things, folks, put them down, start to elaborate, and then you can become more complex. But they're the three things you want to put in. And most of all, you have to stick to this strategy. Whatever your entry is, whatever your trigger is, whatever your management strategy is, whatever your exit from the trade is, those things you have to stick to. Why? Because then we can understand whether or not your strategy works. If you're using different techniques to enter into a trade, you then get a feeling and say, oh, I feel like this is going to happen, so now I'm going to exit early or I'm going to leave it on. Those things aren't measurable. So you're not going to be able to say, when you look back at the last month, okay, this was my strategy, but I didn't execute it. So how do you work out whether or not you've got an edge? I mean, let's say you make money. How do you know if you're a good trader? Because you walked a random walk, okay? So you have to stick to the strategy and use your 1, 2, 3. Your entry, your management, and of course your exit. Enjoy your trading, everyone.